Welcome to Chart of the Day. I'm Robert Folsom. Big move in pound v dollar. See the long-term chart that saw it coming. Here we have a great example of why a long-term chart in a monthly publication is relevant to investors who look for opportunities right now. This is a long-term chart of the British pound versus the US dollar. It's a closely followed cross rate in the FX market. Here's the late 2007 peak in the pound dollar, and after this January 2009 low, the trend has been sideways to slightly lower in the decade plus since then. Our recent July issue of Global Market Perspective showed a version of this long-term chart to subscribers, including this arrow to show the direction of our forecast. Now, you could look at this and ask, did the chart show anything else? Good question, because it did show subscribers the Elliott wave labels, and it also showed that a clear pattern was unfolding, namely a diagonal. This trend line is more than a trend line when you see this upper line also. That's the diagonal pattern, a very recognizable wedge shape. And where this pattern stood at the end of June meant this should follow. That was the forecast. As for what happened next, let's first zoom in from a weekly to a daily chart. The diagonal trend lines are still visible. If we zoom into 2019 with a 120-minute chart, we see only a bit of the upper diagonal line. Here's the high for the year in March, and this is June 28th, the day the July issue of GMP published. One final zoom in shows us the month of June. Here's June 28th. This would be the down arrow we showed subscribers on the long-term chart. Here's what has followed in the pound dollar through July 9th. Again, this is why the long-term chart in our monthly publication is indeed relevant to investors who look for opportunities right now. Not all forecasts work out this way. The diagonal pattern is still unfolding. For more information about Global Market Perspective, please see the text below.